Get a text right before the program today, and it says, we have seen at least a trading bottom. Markets have stopped going down on bad news. We would use last Wednesday as a blueprint for what to do. Who sends me that? Rob Sechan, NewEdge Wealth, one of the investment committee members. So we had him call in to tell you why he thinks we're also at a point where you need to start adding money. Rob Sechan, welcome. Why?
Scotty, we may have even seen a permanent bottom. I'm reluctant to go there, but it's at least a trading bottom. Like COVID, stocks got absolutely creamed. It reset the market. We wrung out a bunch of the crap. A lot of the unknowns are becoming knowns. Still a lot of unknowns, but you know what the unknowns are. We've had two of our big committee members in our morning meeting this morning call kind of interim bottoms at least. Glenn Mintz, fantastic portfolio manager. Bill Inglis, head of our research department. You know, parts of the market are cheap. Cash is on the sidelines. You saw yesterday private equity getting active. Same blueprint in COVID. The rumored Nielsen transaction. This morning, markets stopped going down on bad news. You had China shutdowns, vol in their stocks, the PBOC not lowering rates as expected. Listen, and markets behaving well.
One day doesn't a story make, though, Rob? I mean, so today the markets didn't go down on some bad news. There's still a lot of arrows flying around that you have to watch out for. I don't need to tell you that. I mean, I hear you. Marko Kolanovic says too much bad news or people are going overboard on that. There are some suggestions that retail's getting back into the market, that we're buyers of the dip, according to Bank of America. But my point is, and Mike Wilson was with me yesterday in overtime saying as well, look, earnings revisions are negative. They're coming down. So everything you said sounds great, and it may work for a little, but the longer story isn't as optimistic as you might suggest.
Well, what I would tell you is it's obvious. There's a lot of uncertainty related to the war. Further inflationary pressures, increasing risk related to stagflation and recession are all possibilities. But we know that markets desensitized to bad news. Listen, bad news can absolutely get worse, as you point out, and you have to pay attention. You could have a recession. There's no doubt. That's not our base case scenario.
Okay.
And sentiment is extremely negative right now, Scott. And I just think that as long-term investors, as everybody has said, you have to use market volatility to take advantage. That blueprint that we had last Wednesday, you know, we came on the show and talked about American Express. I don't know if it was Thursday or Friday that we did that. But that stock is behaving incredibly well, and we're already making money in names like that.
Well, you're not the only one. I got to let you go.